Um, okay, perfect. So here we go. So guys, here's what we're gonna do. So we're not gonna do too much of like, again, I don't want to insult anybody, especially a licensed agent, but there are a couple of things that I kind of want to walk through that are important to our success in helping a client. And again, we've got a lot of newer people on there, so you licensed folks got to kind of bear with us here. We're going through these wonderful things. So whether it be pulling up to a house or starting a Zoom appointment, I'm going to kind of cover both. Okay. So with regards to pulling up, because there are still a lot of people that actually pull up to a home and sit with a client. I'm a big believer that when you're out, okay, I'm just hearing a little bit of background noise here too, so I better do that. Better mute out. I'm a big believer that and here's just what I know about meeting with 1,000 clients over the last 4.5 years, is that first of all, when you make that phone call to book the appointment, I don't care whether you're doing a Zoom meeting like over the phone or whether you are meeting with them in person. There's a pact that you kind of have to break. And I like as I made a pact with my wife, a pact with my husband. And here's what it is. I want you to picture, and by the way, this has happened more than 3 or 4 hands of times, like meaning 5, have you ever heard that saying, I have more than 2 hands of times it's actually happened. I'll bet you 25 times in 5 years, I've showed up to a home, got to a client's house, got to the kitchen table, gone through everything's done, and then I'll get this from, it doesn't matter whether it's the husband or the wife, and they'll make a statement kind of like this. Eric, I gotta admit, I'm a little surprised we ended up doing this, because I told my husband when he got off the phone with you on Saturday morning, I asked him who you were, and I'm like, oh great, we got some mortgage guy coming to the house, and I told him no matter what you said, no matter what you did, we weren't buying nothing. So if I've had one of those, I've had 25 of them. And then here we are taking a request of coverage and being protected. Why do you think that was? Well, it was because I showed up on time. I wasn't 7 minutes late. And by the way, I'm going to give you some little tips on tricks on booking appointments. The reason I'm really never late is because even though we agreed upon a time, say for instance, like 5 o'clock, I always ask for 15, 20 minutes on the front end and 15, 20 minutes on the back end. And how I do that is right before I'm getting ready to get off the phone, I'll say, so, hey, Mr. Jones, real quick, because we have that 5 o'clock. Okay, that's Tuesday night, the 7th. Okay, perfect. Well, great. Hey, just in case if I'm 15, 20 minutes early, and I might be, maybe coming from my last appointment, maybe it didn't take quite as long or traffic wasn't as bad. But if for some reason I'm 10, 15 minutes late, please know I am not disrespecting you and your wife's time. I'm just coming from my last appointment, but I will be there. Okay, no problem, Eric. We got you. You know why that's so important to the person you're talking on the phone with? Because you need an advocate. You need somebody that's on your side, right? Because when you are late, because it's going to happen, right, Jackie? When you're late and the wife or the husband says, well, I don't understand. Like it's 6 minutes after he's late. Oh, no, he's not. He's just coming from his. See, he's protecting me, or she's protecting me, because I gave them that 15, 20-minute window on the front end, and that 15, 20-minute window on the back end, even though I just scheduled it for 5 o'clock. So that's how you protect yourself and protect your time. If you had a no-show, or it ended up being a quicker appointment, then now you can show up early. But if it went a little bit longer, and you did hit traffic, now you can be on time without being late. Does that make sense? Okay, so being on time is really important. I know for a fact that when they see you get out of the car, that they know that you're there. I mean, trust me, they do. In fact, I can tell you that in the winter in Ohio, and don't laugh, Chris, because you live in Minneapolis, there's lots of snow. Well, actually, you live in Canada, practically. But anyway, so that's another show. So, but I've slipped 2 or 3 times in my short career here in the insurance world, like walking up to a house. And I mean, when I say every time, I mean every time. Every time I knock on the door, and what do you think they're doing when they answer the door? Are you okay? Yeah, why do you? Well, we saw you slip. See, they know you're there. So here's my point with all that. If they're watching you and they kind of know that you're there, make sure that you have that level of professionalism that said, so like, Jackie, if you had to go through some packets or different things and you knew this was a younger couple and you're 100% sure, unless this guy's got some, different ailment that you've never heard of it when he's 27 years old, you're going to write him some GPM or Forrester Strong Foundation for sure. But because you've been running all day and you don't have very many of them in your bag anymore, you got to get into your trunk and grab two more packets and you want to make sure you're loaded. Don't do that in front of the house, right? We do that 7, 8 houses back where we get out, or maybe down the street in a grocery store parking lot, and we put all that stuff in our bag. So when I pull up to the house, I'm literally getting out, opening the back door, and putting on my little bag on my handle. I close, do my little beep beep, and lock my car, and I walk up. I look like I'm organized. And I think the same goes for your Zoom appointments, right? For your virtual appointments. You don't want to be fumbling around. Like, don't ever dial the number until you're ready to go, until you've got everything that you need in front of you. Like, you've opened up all the windows on your computer. You've got your presentation. You have your mortgage calculator. You have any other little, and I'm going to show you a couple things that I use when I'm in the house that will help you. Because I have a couple of windows open on my computer when I pull up to the house. Like, they're already open. I don't have to open them just in case. So they're already there. I'm always ready. To me, that's a level of professionalism, because you want to look sharp physically. I mean, outward, look, your shirt's pressed or your blouse is pressed. You got your name tag on, whatever it is you want to. I have my license around my neck. And if you're doing a virtual appointment, it's either around your neck or it's able, you can show it over the Zoom. So make sure that you're ready and able and you're organized. So second thing I want to cover, is that's the breaking of the pact. So they've made this pact. So everything up to this point is a part of breaking that pact. Because, Jackie, if you're, people are doing business with you, there's a level of trust that they have for you up until the point where you start asking them if they want to do a request of coverage, which really means you're getting ready to ask them for their driver's license number. You're getting ready to ask for their checking account information, their social security number, like all of that really personal information. So you're going to struggle to get that if you haven't built all this level of trust. Well, that part of that trust is that they have a perception, even if you're brand new, Chandler, right? If you're brand new, like, I've never done this before, but you want to look like you know what you're doing, right? So if all the windows on your computer are open, or you're walking up with confidence and, you're really there's a level of trust that's built even in those types of things. Okay. So let's talk about and I'm going to cover both, by the way. So getting in the house, is always, it's you think it's an automatic. It's not always an automatic. Okay. There's many times where I've had to kind of work my way into the house just because, let's say that I booked it with the wife and the husband, now it's a 7:30 appointment, or it's a Saturday at 4:00, whatever it is. And he opens the door and you've never met him yet. You didn't talk to him. You didn't book the appointment with him. And he says to you, you're that mortgage guy? Like, sometimes I get that, right? Yes, sir. Eric Valdez, how are you? Reach my hand out, shake his hand. Yeah. Hey, man, I'm just letting you know, like, I had this in Utah. Steve Scoresby's on the line. He's from Utah. He remembers this. I was in Utah, walked up to a home. I was training a new agent, and he answered the door. And he was a chiropractor, about 6'4", gotten home from work. It was a Thursday evening. And he's like, hey, I just want to let you know before you come in here, Ms. Valdez, like, we're totally covered. I got more than enough insurance. Like, we're good, man. So you can do your prezo, but like, you'll be out here in about 15 minutes. Like, that's how he treated me. Now, here's the thing. I could have stood on the door, on the porch and tried to sell, but I'm not selling anything. And if anything I'm selling, I've got to get in the house, right? And I said, hey, no problem, Mr. Jones. Totally get it, man. That's great. I'm sure you got a lot more coverage than a lot of people. In fact, that'll get me to my next appointment pretty quickly. So yeah, if I can just get this out of the way and do my due diligence and do what I got to do, man, I'll be on my way. Okay. And he let me in. See, now I'm in the door. And by the way, we ended up, and I'll tell that story as we're going through the training, because it's always a good one to use. So got into the home, found some pictures on the wall. I'm a real big believer in finding out a lot about a family or a couple or a thing, whatever it is, by looking at what's on the walls in the entryway. Because a lot of times that's what they want you to notice. That could be some pictures of the family or the grandkids or whatever it is. And then when I get to the into the kitchen table or a table where I try to get to where I can see the kitchen. Do you know why that is? Because I want to take a look at that refrigerator. Now think of your refrigerators. What are on refrigerators? Well, if you're a young parent with children, what do you have on a refrigerator? You've got recognition of, kindergarten, report cards and maybe some ABCs for the little ones, those little magnet things. Or if you're a grandmother and a grandfather, you've got some of those ABCs magnets and they're going to be playing. So it tells me a lot about them, right? Recognition, appointments, maybe some important things that are on the fridge. But I can tell a lot about a family by looking at the fridge. I have 5 kids, so I can tell you that that's important. So I'm trying to find some connections, things I can make some connections with. So let's talk about the virtual appointment. Do you think that's any different? Do you think that changes? Of course not. Do you know what I've instructed some agents to do when they're doing a virtual appointment? Let's say you've got that 60 plus, 50, 60 plus, and I would actually say to a client, I'll just say, Mr. Jones, you know what, actually, and I appreciate the opportunity, blah, blah, blah. Hey, I normally when I'm in the home, I take a pretty good look at all the portraits on the wall, and I take a good look at your refrigerator. And that kind of helps me get to know you better. Why do you think that is? And I start up that conversation, and it's funny, I've gotten some good feedback from that. And it's, oh, okay, you want to know about us a little bit? Yeah, okay. And then they'll start talking about themselves, right? So make that connection. So whether you're in the house or whether you're going over the computer, you still have to make that connection. And probably more importantly over the computer, because they're not getting a chance to see you in person. So I would definitely take the time to make that connection. And then here's some other things. So when I come into the home and I sit down, or whether I'm on the computer, you still want to make sure that, you've made that connection, but you want to identify yourself, right? So I know what a lot of us are doing. Jackie, I know you're doing it. And if we have any other licensed agents that are out there running business right now, in fact, I'm going to, and if anybody wants to make a comment about people that have been in the home virtually, or feel free to let me know either by text message or on the screen share here, and I will unmute and let you speak, because I definitely want to get your opinion on this, okay? So guys, here's the thing. When I'm in a home, I always show my driver's license and I show my license to practice insurance in that state, right? If it's my resident state, it's my resident license, it's my non-resident, I usually show both actually, so they know I'm from out of state. And again, why do we think that's important? By the way, I just offer it. So if I sit down, I'm done, I've got nothing on the table, and then all of a sudden we make the connection. It's like, Mr. Jones, before we go any further, I need to do my due diligence here for you. Let me pull out my wallet here real quick. And here's my driver's license. That way, the same gentleman who booked the appointment with you, that's me, is the same person here. So, and then I'll show my ID. This gives me, and they appreciate that. And I can't tell you how many times, you guys, I've actually had people say this. Well, that was really nice, Eric. I mean, the last guy that was here 2 nights ago, he didn't even do that. So now what do I know? I know they met with somebody else, right? I know they met with somebody else. And in fact, I'm the second agent in. But here's what I also know. They thought that was pretty nice that I offered the information as opposed to them having to ask for it. So can I tell you and I'll tell on myself. Do you know that that's actually why I started doing that? Because when I was a brand new agent, you guys, I wasn't doing that. And somebody asked me for it. So much, they took it a step further. He got out his laptop and he made sure my license was valid in the state of Ohio before he would let me proceed. And I respected that. And so ever since I said, man, that was really important to you, wasn't it? He goes, it really was, Eric. He's like, and I'm like, you're right. It's not 1975 anymore. And we both kind of laughed. So do you know that's what I say when somebody says, well, Eric, you didn't have to do that. I'm like, ma'am, it is not 1975 anymore. And then we always have a 2-minute conversation about what it used to be like in leaving your doors open and unlocked and all that kind of stuff, right? So kind of a neat deal. Oh, see, that's awesome, Jackie. You got your state license number right on your back. See, that's awesome. That's great. Wonderful. Great decision to be made. So, and you've been doing this a long time, Jackie. So for sure. Well, guys, let me see here real quick. Go through the appointment one on the decision. No, good question. But Christine, absolutely not. So, guys, by the way, so if you knock on that door, so let's go back to that chiropractor. If I knock on that door and the chiropractor opens the door, and he says, yeah, he's like, yeah, well, my wife isn't here. She got stuck at work, so it'll just be me you're talking to tonight. Oh, no way. You do not go through that. And here's why you don't. Because we both know that, and I'll even go as far as this. You're going to have either maybe the husband or the wife, and she says something like this. Well, guys, we're just, my husband's not even on the mortgage. Like, I bought this house. His credit isn't, I just did it myself. So he doesn't need to be here. Now, we all know that that's still not the case. And you know why I know that? Because I was the guy, I was the agent that would trust that. And then what always happens towards the end is something like this. Wow, oh no, yeah, I would love to take a request of coverage, but my gosh, I didn't realize this was going to be such a big deal. Like, yeah, I better talk to John. Well, I thought well, I know, but man, this is like really important. See, they're always going to give you that reason. It's like, it's like if you're in the home, or if you're in a room, and you turn out the lights, and there are 2 or 3 mice like in the middle of the room, and there's a little bit of light over in the corner somewhere, the mice always find the light, right? And I don't want to minimize what we're doing, and I'm not trying to say my clients are like mice, but I'm just saying that's a pretty good analogy, because if you're going to, they know they need it, but they really they really don't need to talk to somebody. Maybe they just want, so you never do that. And here's the other reason, Chris, and I know you know this, you've been an insurance agent for quite some time. That's why you brought that up. Thank you. You're helping me train the others. Here's the other thing, why you don't. And especially with the older generation, like, when I say older, I'm talking like my mom and dad are 76 and 78. Let me give you another tip. I have kind of a rule of thumb that if they're like 75, 76, 77, I will, when I'm booking the appointment, and let's say, I'm not going to say, Greg. I'll say, Greg, now I'll say, Mr. Jones, now you live down there in Clarksburg, Tennessee. Okay. Now, sir, do you have anybody like a family member, like a son or a daughter, a niece or a nephew, anybody that helps you around with some things, like helping make decisions like this? Well, yeah, my son does. Oh, that's perfect. Hey, I was wondering, can we give him a ring and let him know we booked this for Saturday at 4:00 so that he can be there with us? I'd really like him there. I think that'd be something so he can kind of get an idea. Would he be the beneficiary? Oh, yeah, he'd be the guy. Yeah, if something happens, I want him to get the money to pay the house off. Okay, perfect. Do you want to call him yourself, or do you want to call them together? You know what I'd rather have? I'd rather us call them together. Because you know what's going to happen if you don't sometimes? Dad calls up, like my dad would call me and say, hey, Eric, yeah, hey, what are you doing Saturday at 4:00? Nothing, why? Hey, I got this mortgage guy. You have a mortgage guy coming up for what? I sent in a form. He's going to come show me about mortgage. Dad, you don't need mortgage protection. What do you mean? Okay, well, wait a minute. Son doesn't know nothing. He doesn't have a license. But here's what happens if I get to call. Hey, Eric. Yeah, hey, this is Mr. Jones. You don't know me, but your dad's on the line with me real quick. Say hi, Dad. Oh, hey, son. Oh, hey, Dad, what's going on? Yeah, so here's the thing. So your father sent in a mortgage protection form to the office. He's just really concerned that, not if something happens, but when something happens. He doesn't want to put that burden of making the mortgage payment onto you, because he said you'd be the one that probably responsible for sending the mortgage. And I was just wondering, it's going to take about 10 or 15 minutes. Would you mind coming by on Saturday? Take about 15, 20 minutes. I just want to go over the forms with you and your dad. So I'm sure you're going to have a couple of questions. Do you have time to do that? Well, no, Saturday's not really good, but I could do it first part of the week. Okay, what works good for you? Oh, well, I could do it Monday night. Dad, how about you? Now we booked it, right? And by the way, those are almost always a guaranteed sale. Do you know why? Because now when you're doing the presentation, we'll kind of cover that as we're going through this. And we talked about that pain point. And I'm going to cover this more than once. I'm going to cover it now, and I'm going to cover it in a little bit. So if I say so here's the thing. So here's the thing, John. I'll say Mr. Jones, and the son's name is Matt. I'll say, Mr. Jones. So here's the thing. So if something were to happen to you, and let's say it would have happened yesterday, and you would have passed away, you made the statement that your son Matt would be the one that you would want to give the responsibility to go ahead either sell the home to protect all of the equity that's going to be there for you guys, whether it be 20, 30, 40, $50,000, whatever that is. Now, Matt, are you going to be the one also taking care of like the burial and all that kind of stuff? Oh, yeah, no, I'll be. Okay, perfect. So Mr. Jones, that would be your son, Matt, right? Yep. Okay. So here's why I asked that question, because we want to make sure that when something happens, that your son gets a check, and we'll determine that amount later, of maybe a year's, 18 months, kind of 2 years worth of mortgage payments, whatever that needs to be. You guys will make that decision. But we want to put, Matt, we want to put you in a position of strength, because you want to be able to mourn properly. You don't want to have this panic attack because dad stuck you with a $1,347 a month mortgage payment that you weren't even remotely prepared to pay. You've been saving for, kids' college and all these different things. And now all of a sudden you got to make 5, 6, 7, 8 mortgage payments, while this house is being listed and viewed and open houses. Do you see where I'm finding the pain? The pain is, he's got to make 4, 5, 6. I mean, I'll go up to 10 if I have to, if I feel it's necessary. Because here's what I know. I know that it's not about just protecting dad's life. It's about protecting Matt's finances. I mean, he's married, he's got kids, he's got responsibilities. And then, of course, I always like to make the funny joke because it does bring light to the situation. Matt, because I'm sure that you have no problem helping out and protecting the equity of your home. But my speculation is, if you're like me in my home, if I had an extra $1,347 a month, I'd probably be driving a different car. And they always laugh. Man, you got it, man. I'd be driving it. And then we'll talk about that for 35 seconds, right? So do you see what I'm doing? I'm finding the pain, but see, Matt is there. There's no way that dad could explain that to Matt if this happens. Now I met with him Saturday at 4, puts the Forester's packet plan right, whatever, it's on the table. Matt comes over on Sunday afternoon to check on dad and to bring him some leftovers for dinner. Hey, dad, you guys want to bring by that meatloaf I told you I'd bring by? Yeah, hey. Oh, yeah, the mortgage guy came yesterday. Mortgage guy? What mortgage guy? Oh, I sent in that form thing, and man, you're really going to like it. It's the case that, wait. What do you mean? Did you buy something? Well, yeah, I got a mortgage protection. For what? Well, I mean, Matt, if something happens, what are you spending on that, Dad? Well, it's only $78 a month, and I got one of the cheaper ones. $78 a month? For what? See, do you realize there's no value being built? And as much as Dad is wonderful, and I'm sure his memory's great, Matt feels no pain. He thinks somebody tried to scam his dad out of $78 a month. When in reality, what were we trying to do? We were trying to protect Matt. That's what we're doing here. So, and I know we're going to go back to but that's about making sure that both people are there. We do not do one-leggers. And here's how I get out of that. I never take responsibility. Now, what I mean by that is, just ask my wife, right? So here's what I mean by that is, oh, so your wife's caught up at work? Yeah, she says she won't be home tonight till like 8:30. So we can just, oh man, Mr. Jones, I'd really like to do that. But you know what? Our office, I'm assuming you'd be the beneficiary if she passed away and like vice versa. Well, yeah, of course. Okay, yeah, no, if she's got to be, you both have to be here. It only takes 15, 20 minutes. I get out my phone. I could look, let me get my calendar out real quick. Like, there's no questions about it. I'm not going to argue with them about it. We're not doing it. And I just go to are you sure? Yeah, we're not allowed to. So here, look quick. Okay, so let's go to the Saturday. You said you're available Saturday? Like, I'm just going to reschedule it. And I don't care, you guys, whether it was a 50-cent lead, if it was a $2 lead or a $42 lead. It does not matter to me. Do you know why? Because I made a commitment to show them options and build value in protecting their family. I'm not going to leave that to some 50-50 chance of Mr. Chiropractor being so smart that he doesn't have a license. There's no way he can build value and relay everything. Could you imagine me after I'm almost done, like we're taking the application, and then she comes walking in? What are you guys doing? And, I tell you, hey, Matt, do me a favor. Would you just explain to her what we've been doing for the last 63 minutes? And I'll just sit back and watch. He's going to go like, well, like it's got this thing, like if I get sick, it's like he's not going to know what to say. there's no value built. So don't do it. Like, it's a no-no. Like, and by the way, you will, by the way, every agent goes through it. They think there's the 1 or the 13 that are going to do it. And yeah, and by the way, you're setting yourself up for some financial chargebacks, because if it gets approved, and then the first time, she goes to look on a Saturday morning because she wants to go to Target and go, buy the swing set or the trampoline, and goes, is this that $112 a month? Like, is that the mortgage thing you did? You know what? We're canceling it. I don't even understand it. Boom, it's over. And can I tell you, I'm speaking from experience. So I'm trying to save you guys from that, because it's going to happen. You have to be prepared for that. I'm going to unmute real quick. Remember, this is kind of a very okay. Does anybody have questions about that? About what I just covered? We're going to get into something else, but about that specifically. Anybody have any comments about that? Yeah, go ahead. Yes. Yep. 100%, man. 100%. Yep. Absolutely. So, okay, cool. I'm going to mute back up. We're going to get on to the next little piece here. Go back into this. So we've got to the kitchen table. We're making our connections. Now it's time for us to start talking about mortgage protection, right? About the value of protecting their family. And so when I have a laptop, and everybody's a little bit differently. Some people just have a tablet. That's great. This little, and it doesn't have to be this one. And if you're, guys, this is just what I use. The company Equis has got a great mortgage protection slideshow that you can use on the website. This is something that I had. Most of you know that I was at a different company, okay? I was at a different company before I came to Equis in 2016. And so I had been an agent for 10 plus months over there, but I didn't have anything, like literally anything. It would be like Elizabeth, me saying, okay, great, Elizabeth, so here's the thing, go to your first appointment, turn over the back of that lead, write down their ages, put their mortgage down, write their medications down, and then talk about the value and the income. And okay, that's kind of how I was taught, by the way. I had nothing. There was no Equis Financial training site. There was nothing. And my upline manager was in Bakersfield, California, and I live in Ohio. And he never made the trip out here. So nobody ever went with me on an appointment. And a lot of Matt Wilson's never been on an appointment. Jackie, I don't even know if you went out with Greg or Rod. But you figure it out. Okay. So that's what I love about Equis, is that we've got this wonderful training center where you can plug in and not only have a track to run on, teach you how to dial. You can watch people dial for hours on end if you want to. You can go to the presentation. You can watch Bill Martin, watch Rob Jones, all those things. Your presentation, I can promise you, Matt Wilson got something similar to this. He's on the line right now. He got something similar to this. He's probably changed it 10 times. And I'm fine. You know why? Because he's made it his own. He probably doesn't even use it anymore. But Matt still is going to write $250,000 worth of insurance. Do you know why? But in the beginning, he had a track to run on. He found something that helped him in the home. And then now he's his own person. He's his own agent. Jackie, you're the same way. Chris, you'll be the same way. Edward, you'll be the same way. Elizabeth, Tracy, everybody will be the same way. But you need a track to run on. It's extremely important. So that's all this is. Okay. So I want them to see, and what are they reading? And by the way, now they're engaged as well. They're engaged in what they're seeing. Now, think virtual appointment. If this is the first thing they see, Jackie, then they're engaged in their seeing this, protecting what matters most, my family. That's what we're doing tonight. See, I didn't have to say it. It's right there. And so, so the next little slide, by the way, this video is actually embedded into this presentation. I think I've played this 3 or 4 times ever. But it's here because sometimes people think like, well, I don't really know. And if you're struggling to explain it to them, play the video. Now, we're not going to play the video tonight. But it's an animated little video about mortgage protection. And so you can play that. But I just go to the next slide, and so here's what I say here. I just say, folks, obviously, now whether I'm video or whether I'm in the house, I'm going to let them know, well, guys, here's the thing. So let's, get down to business, blah, blah, blah. We bring it up. And I'll say, Mr. and Mrs. Jones, obviously, I work with Equis. I'm an independent agent. My job is to protect what matters most. And that's not your mortgage, by the way. It's actually you. It's your family. That's what matters most. Would you guys agree with me? Well, yeah, exactly, right? So, and you kind of know what you're doing here. Well, here's the thing. Like we're not independent in the sense that we're not captive. We don't just have one particular carrier that protects families. Okay. There's like 15 different insurance carriers in the state of Ohio, state of Arizona, state of Tennessee, whatever state you're in. I just blame it on the state, right? Don't take responsibility for anything. Okay. That's a joke, by the way. State of Ohio offers this. They want you to have multiple options. I mean, don't you guys like to shop around when you shop at cars? Like, shop around, get the best price, best value. See, I let them know. And why am I doing that? Why do I make the statement? Well, the state of Ohio wants to make sure that you do some price shopping to make sure you're getting the best coverage for the least out of pocket. Isn't that kind of how you guys shop for cars or anything else? Oh, yeah, totally. We do that all the time. Well, that's what we get to do today. Do you know why I say that? Do you know why that's so important? Because that's one of the objections that newer agents, and really any agent, is going to get at the end. Well, my job as a regional manager is I want to teach you how to ride a bike. I'm going to hold on to the back of the seat for a little bit. But my goal is to make sure that I let go when necessary, not just say, hey, by the way, there's no training wheels. Just go. You're going to fall 3 feet. Okay, I don't want you to fall as much. So I'm putting training wheels. If you can make a statement like that, then here's what's going to happen. Because when you get to the end, if you haven't established that that's what you're doing today, then you're going to get a lot of people making the statement, well, Eric, this has been great. No, we'd really like to think about it because, we want to shop around and check some other companies. And okay, I don't get that. Do I ever get it? Sure. But I don't get that like you would get it if you didn't say that. Remember, I'm always telling on myself. I mean, I wrote 200 applications in 10 months at my other company. I didn't say that to brag. I'm telling you that the first probably 20 or 30 of them, I was getting that. And I knew, I'm like, okay, this isn't working. So I have to change this. What would it take for me not to say that? Well, I would need an agent to convince me in the beginning so that I'm not thinking about it the entire time that I want to shop, because that's going to be my light in the dark room. It doesn't matter if it's only $47 a month. He doesn't know that we price shopped 5 or 6 different companies. Hopefully that made sense. So that's why I say that. So going back, folks, obviously, I've worked with Equis Financial. I'm an independent agent, and I'm not captive on any level. My job here with you is to I kind of represent you to all of the carriers. The state of Ohio actually is contract with 15 plus carriers here to make sure that you can do some price shopping and that you can get the best coverage for the least out of pocket. Isn't that what you guys normally like to do when you buy a car and stuff? Oh, no, we'd love to do that. Yeah. Well, that's what we get to do today. Isn't that great? Yeah, no, that's great, Eric. See, you just killed it. That's what we're doing today. Okay. So, and by the way, they get to see that there's other things we do. We're doing term, okay, whole life, universal life, mortgage. I'm not covering these things. Don't get into that discussion. But you're here for mortgage protection. But, okay, how do you overcome the objection when they're still present? Okay, hold on real quick. I didn't know that I saw that. Where is that at? I'm going to unmute. Can you ask that question, please?
Yeah. I mean, I ain't crazy about doing it, but little kids, everybody. The only one she protected was me and the kids and Atlantica. I said, that ain't going to help, no.
Sir, there's somebody that asked a question about something. Can you ask that question? You typed it. Hold on real quick.
Well, I was in the middle of a meeting for insurance stuff, and I had to leave my
where is I don't know who asked the question. Can you guys can you type the question again, please? Chandler. Yes, Chandler. What's up? Yeah, can you type that question again? Or you know what? Actually, are you on the line here? Let me unmute this. Chandler, are you in the conference? Yeah, I can hear you now, bro. Yeah, that was okay. Well, because when you get to the end, you're gonna yeah. So when you get to the end, you're gonna show them not just one, you're gonna show them two or three or four. So you're not just gonna show them one price. And I usually hit it pretty hard in the beginning right there. You usually don't get that a lot if you've established it up front. And if somebody were to say, if they were to say that again to answer your question, Chandler, I'm like, well, Mr. Jones, that's exactly what we just did. Is it a little bit more than you wanted to spend? Well, no. Okay. So and now I can backtrack. Okay. Well then, so what is your concern? So that I make sure that did I miss something? Maybe I didn't explain it right. See, correct. And but if you establish that in the beginning, you're not going to get that a lot. Are you ever going to get it? Yep, sure will. Guarantee it. But you're not going to get it as much as if you really focus that in the beginning and make it, spend 10 seconds on it. That seems like it's a long time. 10 seconds is a long time. So spend 10 seconds on it. All right, I'm going to leave. It doesn't sound like the background noise was more so coming from the computer. So I'm going to leave this volume on, so you guys can still. Okay, so if you have any questions, ask. So, but here's what. Okay, yeah, no, that's totally fine. Okay, good. And now here's the other thing too. So like I know a lot of experienced agents do this as well. So this is something a little bit more for experienced agents, but I'm still gonna talk about it now because I want you to get in the habit of doing this. Okay? If Jackie and Matt were unmuted and Steve Scoresby in Utah, they kind of already have a basic idea of what they're gonna write as long as health is in place. For example, GPM, everybody knows GPM 95% of the time when you're doing a mortgage term is going to beat Foresters, it's going to beat Mutual of Omaha, it's going to beat Columbian Financial, it's going to beat them all, right? Okay, so you kind of already know that. So what I like to do is to get them in the mindset of that's where we're going to go, and I want that to be the specific carrier. And if we got a 27, 37, 47, and I will make a reference. So if I'm going to make reference to the carriers, GPM's right here, right? And then we've got Foresters, Mutual of Omaha, and I want them to become familiar with the ones we're probably going to show prices on. So those are the three. I don't mention AIG. A lot of you new people don't even know what AIG or Gerber is, but we only use those two carriers for guaranteed issue policies, which I'm not going to get into right now, like if somebody were really sick and couldn't get a term. Now, but why would I mention Gerber? Because everybody and their dog knows Gerber. It's a family household picture. It's a family household name. Everybody at the baby food. Okay, we all know Gerber, right? Okay, so that's what, so when I hear, again, getting back, so, Mr. and Mrs. Jones, obviously, we're going to start talking about the mortgage protection, transition statements, however that transitions for you, which is usually how my transition statement is. Let's say we were talking about the Cleveland Browns and how they stink and they haven't won a game in 16 years, whatever it is, right? So I'm going to, say, man, Mr. Jones, I would love to continue to talk about the Browns, which is kind of depressing me. But why don't we kind of get down to business a little bit here and kind of talk more about protecting your family, if that's okay with you. Now, I didn't say I said talk about protecting your family. See, nothing comes out of your mouth from the time you knock on the door to the time you leave the house and close the door. Nothing comes out of your mouth that doesn't build value in protecting that family. So think about what you're going to say before you say it. That's why I say that. Mr. Jones, I would love to continue to sit here and talk about the Cleveland Browns because, of course, it's kind of depressing though. But what I'd really like to do is, if you're okay with it, I'd like to kind of transition a little bit and let's talk about protecting your family because that's kind of why you sent in the form, right? No, it really is. Ma'am, is that okay with you? See, I'm getting them to respond already. All right. So then I'll say, great. Well, let's tell you what. And we're not going to watch this video. I'm sure you guys have a pretty good idea of what mortgage protection is. But what I do want to indicate to you is that the state of Ohio cares about you. In fact, so much that they don't have just like one carrier. Like they're not captive in that sense, and I'm not captive either. My job is to take all of these companies, there's like 15 of them, all the ones we know and love. GPM, one of the oldest, and most people, we end up going with GPM because it's usually less expensive. Foresters, great company, been around 150 years, lots of member benefits, another wonderful company. Mutual of Omaha, Gerber, all the ones do you see how I did that? I focused here and I focused here. This one, but I'll write these two all day long. If I showed you the percentage of business that our agency does, just in the last 3 months, our agency has written like $140,000 of premium just for foresters. We're in the company in Equis Financial, we are the number one agency. We write more business with foresters than any other agency in the entire of all of Equis by like 35%. So that tells you where we're focusing our business. So that's a great statement to make. And by the way, folks, we do lots of other things, but we're here today for the mortgage protection. See, I draw their attention to it, but that's all I'm going to say about that. Okay. Now, folks, a lot of people, usually before I come, you probably talked about this, around the kitchen table. You might have talked about it right before I came. Like, why does Eric have to come out to my house and talk? Like, I don't understand. Just quote me over the phone, right? Did you guys talk about that? See, I'm engaging them now. Oh, well, yeah, I thought it was kind of weird. Like when he got off the phone Saturday morning, I'm like, why is he coming to the house? I don't get it. Yeah, you know what? And a lot of people ask me that. And here's really the deal. See, back long time ago, 10, 15 years ago, they used to come out and put a needle in your arm, make you do like blood work and stuff. Do you know they don't do that anymore, Mr. Jones? They don't? No. See, here's the thing. All of those, see, I'm making this conversational. In the beginning, Chris and Elizabeth, you're just reading it. Okay? You're just reading it. But I've had 1,500 appointments, probably more than that in 5, but I'm just telling you, try to make it, you see the line, but how I'm making it conversational. Here's the thing. So the state of Ohio, yeah, they want to maybe just agree with all of those carriers that we saw over there, that as long as a state licensed underwriter, that's me, comes out and makes sure you guys are alive, upright, breathing, not on oxygen, and they always laugh when you say oxygen. I'm like, I didn't see any cords running around. No, we're good. Okay, perfect. So you're almost there. That they're not going to require any of that. All the programs, Mr. Jones, they're all non-medical. And so, and there's just like two simple steps to this whole thing. There's eligibility and there's suitability. Now, eligibility is what you're probably thinking right now is like eligible for like a loan, like because you guys just closed on your house. No, this has nothing to do with your finances. Do you know why I say this has nothing to do with your finances? Because what do you think, meaning qualifying for? Because some of these people think, oh, great, he's going to want to run my credit again. See, here's my thing. If you guys can hear me pretty good, right? If I do this, that's like what? Me knocking at your door, right? I want you to understand something. The minute that they hear this, the wall goes up. Haven't you guys ever done that in your house? It doesn't even matter if the pizza guy's delivering. Like if somebody, you stop and you like try to assess the situation. Well, that's exactly what they're doing. So I don't want to be the insurance guy. Well, Eric, you are. I know, but I don't want to be the person. I want to be Eric Valdez, who's a father and a husband who happens to have an insurance license, but he cares a lot about me and he's going to protect my family. I already have the badge and the persona, right? I've got to get rid of that. And the only way to do that, in my opinion, is to try to make this more of a conversation, ask questions, engage them, like we're sharing a lemonade and we're sitting around the kitchen table, and at the end, we take a request of coverage. If you make this too much like a transactional, here's the pen, put it in the right hand, hold it with 3 fingers, you do that, you're going to get some think about it. You're going to, in the beginning though, Chandler, all you guys on the phone that are brand new, don't worry about it. Like it's okay. Like here's the thing. There's going to be a certain number of a percentage of people that you meet with, and hopefully a lot of them are going to be with Chris, they're just going to do it because they knew they needed it anyway. And those are called laydowns. They're going to do it anyway. And that's great. And you're going to experience some of that. I just want to set you up. Matt just wants to set you up. Jackie just wants to set you up to know that, hey, you know what? Let's make sure that they can, give them some things to put in their tool belt. And so one of the things I want you to put in your tool belt is just to be yourself. have a conversation. You don't need to know about mortgage protection. You just need to read the slides. Okay, but try to make it conversational. So I'm going to start over again. So a lot of people, Mrs. Jones, and you probably asked your husband this when he got off the phone Saturday morning. Like, okay, I get the mortgage protection thing, but like, why does he have to come to the house? I'm like, I asked him that. I thought that was weird. I know everybody does, and so we just put it in the presentation so we can get it out of the way. So here's the thing, Mrs. Jones. Here's why I had to come. Do you know people will actually tell you things over the phone that are not true? And she laughs, right? See how I'm already telling you a different way? Because it just depends on my mood. But the story stays the same. I've actually knocked on people's doors that say oxygen in use, but yet Mary Smith told me over the phone she was healthy as a horse. And they always laugh. I'm like, yeah. So that's pretty much why the state is not going to give you a mortgage protection policy and cut you a big fat check without making sure that you're alive, upright, and breathing. And they're like, got it. See, so you could just find a way to communicate that first statement that makes sense for you, Chris. Like, you bring with all this wonderful experience. Well, use that to your advantage. Anybody that's on this phone was hired because of the skill sets that you're bringing to the table. You have the ability to make a connection. You sound good on the phone. You're going to be able to book appointments. You've got life experience. You have industry experience. Guys, you're stronger than you think. You know more than they do. You have the license, so don't cut yourself short. So so basically, all those carriers, they've agreed with the state of Ohio that as long as I, a field underwriter, a senior field underwriter for the state of Ohio, that verifies that, yep, Mrs. Jones, you are not 5'8" and 5'75". You are 5'4" and probably 120. Whatever you want to say, right? So they're like, got it. Nope, makes sense. Yeah, because all the programs are non-medical, Mrs. Jones. Nobody's going to come out and put a needle in your arm. There's no blood work. There's no EKGs, like the whole 9 yards. I try to say something that makes them laugh. I'm like, got it. Because there's really only 2 steps to this entire process. There's eligibility and suitability. Now, you guys just went through eligibility at the bank, didn't you? Like, probably more than you wanted to, right? Did they make it like almost a strip search? I know it was terrible. Like, how many times they ask you the same question like 13 times, right? Oh, it was terrible. Exactly. So this is not a credit thing. Eligibility has nothing to do with your finances. Okay, they did that at the bank. Eligibility here, you guys, has to do with things that are of risk to an insurance company. And what do you think those things would be? Like height, weight, medications you take from a doctor, like they had a heart attack, what year was it? Those kinds of things. And that's why I'm here. That's the eligibility. Now, suitability, that's where you guys come in. See, I don't determine, you guys determine some kind of a monthly premium that makes sense for you guys. So, like, oh, got it, yeah. So, because really, here's the thing, you guys. So, and so my job, and I usually go back to the slide, see my job, and then here's what I do. I kind of pivot myself if I'm in the house so that they can actually see me. Okay, I gotta mute that, guys. We got people talking. So I'll kind of pivot myself. Generally never. No, in fact, I've written, you know what? I've written 2 fully underwritten policies in 5 years. And we're talking like almost 1,000 applications that have been approved, that I've been paid on. You're going to really hurt your clients. And we'll talk about that later. Don't do it. It's a waste of your time and a waste of theirs. And you can hurt their insurability. So I kind of turn like I'm facing them with the computer, and I'll say, my job, we sit on the same side of the table because we're actually I'm representing you to the carriers. I don't work for those carriers. My job is to find the best coverage for the least out of pocket. And they're like, got it. Okay, then I'll go back to the slide. All right. And once we find a program that best suits your needs, then we take that request to coverage and we're going to send that up to the carrier, and then they approve it. See, I just talked about sending up an application to the carrier. Make sure. Okay, so that's what you cover. I know we're spending a lot of time, but I'm giving you, like, if I literally went through this, it might take me 8 or 9 seconds. But this is what if you build value building statements. Okay. Now the next slide. Now we're going to switch gears a little bit, and we're going to talk about the policies. Okay. Now we're going to we want to let them know what the policies do for their families. And so here's the thing. Sometimes we got the husband, most of the time we got husband and wife, but we got some man pride, right? Or we have people that are kind of educated. They think they know what they're talking about, even though they don't have a license. So I always make a transitional statement that gives them respect, even though they don't know anything about this. But it also allows me to get through and talk about it without feeling like I'm insulting their intelligence. And here's what I say every single time. I'll say, now, folks, guys, I know this isn't your first rodeo with a mortgage or mortgage protection. I'm sure you can educate me like you know what it's about. But there are a couple of things that have changed with mortgage protection. If you wouldn't mind, I want to cover those. See, I just asked for permission. I'm like, oh, yeah, go ahead. They know nothing, you guys. But see, I made it sound like I know. Guys, this isn't your first rodeo. You've been down this road before. And I don't want to insult your intelligence, but there's a couple things that have changed with the coverages and things, and actually that are really nice for the client. I just want to make sure and go over those with you, okay? Oh, no, that's great. Okay, perfect. So, guys, so obviously we know that these policies do put in a death benefit and protects either the entire mortgage, a portion of the mortgage, or it can provide like equity conservation, right? And we'll explain that later. So it basically protects, it protects everybody, right? It protects everything. Now, these policies, what they do, to be really kind of transparent about it, they eliminate any financial burdens on family members, the surviving spouse, any children, siblings, etc. Because that's really people. And then, guys, here's the slide. Do you know that 48% of all mortgage foreclosures are a result of what they call critical illnesses and terminal illnesses and chronic illnesses? 48% of all businesses fail as well. If all of a sudden something happens to a family member and they either get sick or they pass away, people don't even get to mourn properly. The last thing on their mind is what we're talking about here, right? Let's talk about a financial burden with all those things that are going on. So this is a little, pain point. Exactly, Chandler. You're exactly right. You're trying to hear this, exactly the pain point. So it eliminates any financial burdens on family members, such as surviving spouses, children, siblings, the whole nine. And that would, ma'am, that would be you, right? Either one of you. Now, there are policies, they're called living benefit policies, okay? They cover you from illness to death. Now, let me ask you a question, Mr. Jones, and kind of a leading question. I already know the answer. I just want to make sure you see this the way that I do. If we're all going to pass away, right? Yeah, we're all going to die. Okay. Do you think you'll get sick first? Or do you think you're just up on a Tuesday at 4 o'clock, just kick the bucket? No, I'll probably get sick. But why do you think that? Because isn't that what most people do? Yeah, most people get. And what do they usually get sick with? Well, I don't know, like cancer, like cancer, heart attack, stroke, those critical, chronic, and terminal illnesses. See, that's what we just talked about. And I, bring up the slide. And by the way, Matt, Jackie, I'm putting that into the slide presentation. In fact, I should have that done here in the next 2 days. So this slide right here is going to be there. So you're going to cover that. See, do you know that there are still 3,000 foreclosures in this country every day, you guys? And this is what I'm telling the clients. That's how I'm talking to my clients. Do you guys know that there are over 3,000 families a day that still file for foreclosure? And it has nothing to do with the mortgage crisis. Isn't that crazy? Oh, yeah, that's 3 a day, you guys, a day. It's 15,000 this week. And, and by the way, this right here is why. So could you imagine, like right now, now guys, Chandler, pain, right? Here's the pain. Could you guys imagine like not having a policy like this? And all of a sudden, sir, like your wife loses we haven't even talked about income yet, but I'm already closing. The close is not the price. The price is irrelevant if you do this kind of stuff. If she loses your income, like that's a bad deal, right? She's probably one of these 48%ers. Do you know that that's the reason? No, I could totally see that. Ma'am, does that make sense to you? Yep. Okay, perfect. So we're already starting to do that. So when you go to living benefits, okay, this slide is going to be behind it. But for right now, if you had to do one tonight, you could just go to the slide. All my windows are open, right? Okay, I went right to it. Because what it does, See, here's the thing. Here's actually what happens with mortgage when somebody gets sick. When somebody gets sick, their income goes down. Why? Because you just lost your husband's income. And what happens to the debt? Now, why does it go up? Like, do you guys make like monthly payments like we make monthly payments? Like we got like Netflix and we got this and $46 here, $57 there. How much you pay for your cable bill? Like 140 bucks a month. They're like, oh my gosh, I wish it was. It's like 169. Exactly. But man, let me ask you a question. If you lose your husband's income, like yesterday, like if this had happened before I came here today, would you agree with me that monthly mortgage payment, or that monthly payments, 14, 46, 112, like those are now your worst enemy, right? Oh my gosh, yeah. Okay. Do you see she's already getting this? And we're not even talking. See, this is the first time I'm bringing it up, and then I'm going to bring it up again when we go through that deal. But this little chart helps people. And I'll say, and this right here, this portion of the period right here, this is the time off work. This is where banks foreclose on your homes. What happens after the third payment, Mrs. Jones? Oh, they'll take it. Do you remember when that? Yeah, I remember hearing about. Yeah, my sister's friend, and she'll tell you a story. And by the way, don't ever shut her up. Let her tell the story. Let him tell the story. They're actually helping you do what? Build value. Okay. So right when you get to the living benefits, that's your cue to go here. You go back to this, make this statement, come back here, talk about this. Okay? And I'll say, so that's here's what I mean by a streamline of income. Isn't it nice to know that I never take responsibility, I blame the insurance carrier. Isn't it nice to know that these insurance carriers have gone to great lengths to make sure that these aren't your mom and dad's old death policies? Like that, if you die, you get a check, right? No, they'll actually let you access a percentage of the death benefit to make mortgage payments, car payments, pay medical bills, put money on Johnny's lunch card, like whatever you need to, right? They're like, really? Isn't that great? And you don't necessarily always have to pay that. Isn't that crazy? See, wouldn't you say that's mortgage protection, Mr. Jones? Mrs. Jones, what do you think? Oh, that totally is. See, and the companies, the banks love it when you do this. You feel better. I mean, wouldn't you? I mean, something happened to him yesterday and you didn't have this. I mean, I'm like, no, I totally get this now. See, you've kind of already sold it, but with value building statements, you've engaged them in this. They're with you. So now let's go back to the Zoom appointment. Do you realize that nothing changes? If you're doing a Zoom appointment, I'm using my cursor. Now, do you see this next line, guys? Okay, the living benefits. Let's talk about that for a second. Okay, I'm going to switch slides here for a second. Hold on. Okay, can you guys see the little doctor? Okay, see, and then just walk through it. That keeping them engaged is really important. I've heard some funny stories from a couple of the agents. They go, yeah, like all of a sudden he's like, okay, I'll be back in a second. And then he turns the phone and then all you see is the ceiling, right? Let's keep them engaged. So you talk about the streamline of income. And by the way, folks, all of the policies have level death benefits, so they never decrease. And the premiums are level. They never increase. And by the way, you get to choose the beneficiary. And in my personal opinion, like that's the most important part of this whole deal. That's, for me, that has a lot of value. Do you know why that's so important to me, Mr. Jones? Mrs. Jones? No, I don't. Okay, do you mind if I share it with you? See, when I see the word beneficiary, this is my, all right, let me see if you guys can see me. Let's put this on. Let me turn this. Okay. Oh, you know what? Actually, I'll allow Vicky to Nikki. Okay, let's see. Hey, Chandler, can you see me? Okay, hopefully some of you guys. Okay, so here's the thing. Okay, good. Well, here's why I wanted you to see me, because when I'm sitting in front of my client, I use my hands a lot, okay? This is one of those important times where you want to use your hands. Like, I'll back up a little bit so you can see it. So when I'm sitting there with my client, most of the time, by the way, my hands are in my lap. They're not up on the table, pen in hand, not that kind of thing. But here's why this part is so important, because I want them to engage. So here's what I'll say. So folks, I think choosing the beneficiary is probably one of the most important parts of the whole thing. And here's why it has so much value to me. Do you guys mind if I tell you? Okay, great, thank you. So here's why it has value to me. See, I'm no different than you guys. See, I make an income, my wife makes an income. See, my hands, like it's my income. Okay. I make an income and my wife makes an income. But here's what I know. And together, and by the way, that's how we kind of qualified for the house. I'm sure you guys were the same. But here's what I know. If I don't make it home tonight after you guys are my last appointment of the night, if I don't make it home tonight and I get killed in a car accident, something happens terrible, right? And she loses my income tomorrow. Judy, let me ask you a question. See, now I'm engaging. Judy, let me ask you a question. Can my wife, Kim, go down to the bank, to the loan officer that approved us for our loan, and just say, hey, Joe, can you just lower my mortgage payment? Yeah, Eric just passed away, and like I lost this income, like I can't. Can you like lower the payment for me? And Judy, what do you think he's going to say? Well, no. Okay, but why can't he? Well, she just lost your income. See, she's telling me, by the way. Do you guys realize we're actually talking about them, right? But we're doing it by talking about me, right? So let's go over that again. Remember, you see the word beneficiary. That's your cue. You don't have to do it like me. I'm just telling you what I do. You make your own version. You don't have to use your hands, do anything you want to, but this is how I do it, okay? So I'll say, yeah, so because here's what I know. I know that, if I didn't make it home tonight after my last appointment with you guys, and I got, killed in a car accident, heaven forbid, I make an income, my wife makes an income. If I died and my income went away yesterday, because I promise you, if I'm not out there protecting families, Equis Financial is not paying me, and she's left with her income, Judy, can she just go down to the bank, in a few weeks and say, hey, Joe, I've been mourning the death of Eric. It's terrible. But yeah, so I lost his income. Like I'm struggling financially. Can you just lower the payment? Well, no, I can't do that. And Judy, why can't she? Well, why can't he do that? Well, she wouldn't qualify. Qualify for what? See, I need her to. Well, she probably wouldn't qualify for the loan, right? And why? Well, she doesn't make enough money. Exactly. Now, see, I have life insurance, Mr. and Mrs. Jones, but see, that's for income replacement. Watch that again. I have life insurance, but as we all know, that's for income replacement. Now, what objection, Chandler, since you've been my objection guy, Chris, Jackie, Matt, sometimes people think right here that life insurance is enough to take care of the family. Let's quickly go back to our chiropractor in Utah, okay? And this is a real story. Steve knows this. So that guy who let me in, one of the things he said to me before he let me in, remember he said, I'm totally covered. We have a bunch we don't even need this. No problem. See, I'm not going to fight him about it. I just want to get in the house because I'm getting ready to tell him about my story. So we get to that point in the thing. And so that's why I say, now I have life insurance, but we all know here that's for income replacement. And I've told Kim, if that happens to me, you need to get anything in our lives that has a monthly bill on it, like get it out of your life. Like Capital One card, boom, pay that sucker off. Lowe's card, boom, get it out of your life. And Judy, why? See, we cover that. Judy, why is that important? Well, yeah, because monthly payments are kind of her worst enemy. So she'll start talking like me. And so now they're engaged. Their eyes are open and their ears are open. And why is that, Chris? Because we're not talking about them. We're talking about me. But I'm really talking about them, right? True? Okay, because this has value. Guys, it's happened 3 or 4 times. It happened to Jason Patello, one of our top agents, about 6 months ago. But here's what happens if you don't build this value, and I promise you it'll happen to every one of you at some point in time in your careers. You're going to get a phone call from a man or a woman that says something like this. Yeah, Eric? Yeah, this is Eric. Who's this? Oh, yeah, this is Mrs. Jones. Yeah, so like you were out at my house about a year ago, and did we do a policy with you? My husband said he was going to call you back. He said he wanted to think about it. Ma'am, no, he did not call me back. Oh, okay. Well, yeah, so like he died a couple weeks ago, and I'm just kind of struggling a little bit, and I was just wondering if, dang it, and your heart's going to sink. And I've had that happen more than 3 or 4 times. And you feel like, okay, did I do everything? Did I say everything that I could have said to protect that family? And I can't remember what I said to them. But see, if I'm consistent, if I say the same thing, even if I deliver it a little bit differently, if I become really consistent with my messaging, then I can say, yeah, like I'm almost positive I did, because I make sure that I build value and give them what. Okay, so this is really, I mean, I don't want to make it sound like this is a sale where there's all these little trinkets, but I'm speaking to you guys because I want you to understand what you do for a living is extremely important to families. I told you I was a loan officer, right? Yes. I've gotten the call at the bank where the Mr. Jones calls and wants you. Is there anything you can do? Like, I know I've missed 2. I can't make the 3rd. And my daughter says she just doesn't have it. And guys, like, you want to cry with her. Let's do our best to always, and by the way, now that I've told you that story, I know that Jason uses that in the house. Uses what in the house, Eric? Here's what Jason uses. You know, one of the managers that I work with, his name's Eric. He actually used to be a loan officer in the bank, and he tells us stories about how he'd get the phone. See, you can tell that story now. It's not your story. It happened to you, but now that you know it, you can use those stories. And stories help build value in protecting families. So, again, you know, and so let's go back to this. So, you know, this is important. With the 608, okay, this is important. By the way, do you realize right here with the hands and the income, this is the close, by the way. The close isn't $78 a month. This is the close. If you get this right, that has no, $78 is nothing. Okay? Don't worry about the premium. Worry about connecting. Worry about building value, and worry about engaging them in what you're talking about. See, by the way, if I do a virtual appointment and she's seeing me do this, nothing's changed. The only thing that changes between a virtual appointment over the computer or in the house is the way you are communicating with them, but the messaging is the same. You still have to connect. You still have to build value in you. That's why you're showing IDs. You have to build value in the products and the carriers and in the situation. It's not so much what if they do, it's what if they don't. And what we're talking about right now, I know I'm getting passionate about this, what we're talking about right now is kind of what happens if you don't do this. And so, Chandler, since you're the objection guy, there's sometimes, the reason I say now, folks, you know, I have life insurance. I'm sure you guys do too. You know, and I've told my wife, Kim, like, we know life insurance is that is for income replacement. And man, I would need that to last her as long as she possibly could. But Mrs. Jones, Mr. Jones, if I think for 1 minute, and you'll probably agree with me, my wife is never going to take that big life insurance check, right? And then take my monthly income and divide it in there and put it in little stacks of what I make. This is what I'm actually doing, in little stacks of what I make. Like, we're highly mistaken, right, Mrs. Jones? Oh my gosh, no. And why is that? Do you think there's going to be some unexpected things? Oh, totally. Like what? What do you think? See, she'll start making comments. Oh my gosh, like, you know, I'm like, and also I'll name some things too. I'll like, yeah, exactly. Like, in the credit card payments, like, do you realize, I mean, Kim, pay that thing off. Get that Lowe's card out of your life, because your income just changed, like, dramatically. And so the life insurance is for the income replacement. That's why I have mortgage protection. See, I want my wife to be able to be in a position of strength, just like you do, Mr. Jones. That was a very important statement. I want my wife, Kim, to be in a position of strength, just like you do, Mr. Jones, that when something happens, not if, but when something happens, she can take this over here and set it aside, that life insurance, but this mortgage protection policy, she has one of 3 different options. This is where the mortgage calculator comes in, by the way. I'm getting ready to show it. If those of you who don't know about this or aren't using it, this helps you close the deal. So I want her to be able to either go down to the bank and to be able to give them a chunk of money and refinance the house down to a payment she can afford and what she can qualify for. That's number one. But Kim might say, this is the house we built. Like, I don't want, I think I'm just going to sell the house. Now she can do what, Jenny? She can what with that money? Well, she can make payments. Payments until it's what? Until it's sold. Right. So she got to mourn properly. She got to make the mortgage payments for 3, 4, 5 a year, whatever, and then she still has some left over, right? I mean, that would make you feel better too, right? Oh no, that'd be totally, I'd feel way better. Okay. Or number 3, she might want to even do this. If she's thinking investments, and I've told Kim, hey, do this. If something happened to me and you don't want to live here, it's too much house for you, then refinance it down, pay it down to a sizable amount till the mortgage payment's $300 or $400 a month, because the mortgage payment might be $1,500 a month to the bank. To $300 to the bank, but rent on our house may be $1,500. You just created income for yourself. It's a rental. Oh yeah, sometimes they'll say, oh yeah, that's right. See, so it doesn't matter. It matters what happens, but it doesn't really. Why? Because she's in a position of strength. In fact, let me show you something real quick. Let me show you something real quick. So here's a mortgage calculator, guys. So let's put in a $150,000 mortgage, right? And let's put in 4%. By the way, you can download one of these on bankrate.com. Matt has one. Jackie has one. I think they'll send this to you. We'll send it to you. So put in their mortgage at $150,000, and I'll say, so just for example, let's just say, remember that most people do about half or 3/4 of their mortgage. Okay. And if she's, or if, whatever her income is, like try to make that payment around $300, $400 a month. Here's how you do it. If I put in 150 grand at 4% for 30 years, do you see the mortgage payment? It's $716. If I put in 75,000, monthly payment $358. Do you see that? Okay, so now 75. That's only $75,000 of coverage. So here's what I do. I put in their mortgage amount. I'll say, so your mortgage amount is $150,000, right, Mr. Jones? Yep, sure is. Let's just say you only covered half your mortgage. Okay. So let's say you only covered 70. Say all of a sudden you passed away, 10 years from now. Okay, so here's monthly mortgage payment. 10, that's 110 times 12 is 120. So let's see. So at payment 120, which is right here, okay, you're going to owe $118,000 in 10 years. So let's take a calculator, and I make them do this. Okay, ma'am, what'd you do? I'll give her my calculator if I'm with her. Take 150,000. Now, minus out 75,000. What do we get? We get 75. We get 75,000. Okay. See, I still want her to do that. Okay, but you only owe 118. 118 minus 75,000 is only 43,000. Let's see what a mortgage payment is at 43,000. What's that number say? $205. So, Judy, let me ask you a question. If you protected half your mortgage and he would have died yesterday, do you feel good that you could go down and have a mortgage payment somewhere between? Oh, yeah. Could you afford that? I could. Mr. Jones, could she afford to make that payment? Yeah, she could. Do you see how we've protected your mortgage without having to protect the entire amount? Yes, I do. Okay. See, now I'm building value in me. A lot of insurance agents come into homes like this and they tell you need to protect the whole amount. And by the way, a lot of people do. You know why I say a lot? Because he may be one of those people. I don't know yet. A lot of people do. But here's the thing. The only person in this room that would benefit from you having a larger and a higher face amount on a policy, who do you think that would be? Well, you're the insurance guy. Exactly. And what am I telling you that you can do? I can do it for lower. So at least you know I'm not here for me. I'm actually here for you. If you want the whole mortgage protected, I can show you that too. But I'm going to show you a little bit of everything. See, you're building value in you. They're seeing you as a human being. They just saw you as an insurance agent, but one that said, I'm okay with you doing something lower. Now, just for a minute, imagine that I was the guy on Tuesday night, and now it's Thursday night. And the insurance agent comes in behind me who doesn't talk like this, because most of them don't, by the way. They're trying to protect the whole thing. And now I come in and say, well, yeah, well, protect the whole thing. I mean, you got to do that. I mean, and what are Mr. and Mrs. Jones going to remember? They're going to remember that Eric on Tuesday night told them that we don't have to do that. And guess what's going to happen? He's going to be asked to leave with a what? A think about it. And then they're going to call me back with, yeah, Eric, yeah, we're going to go with you. So if that happens, that's what usually happens. But I can tell you, if you do things like this, it doesn't happen. They take the application because they trusted you, they liked you, you did right by them. That's why they do that. So guys, let's go back up here. This is for visual purposes. 1, 2, 3. That's it. And so once that's done, then once you're done with that, and you say, well, great, and they understand all this, then you're just going to say, well, tell you what I'd like to do is to go ahead and bring out I need to gather some information about you. It's called an underwriting sheet. And I just need to get a little snoopy with you. We're going to find out, a little bit about height, weight, and all that good stuff. And then we're going to go ahead and we can show you some prices. How's that sound, Mr. Jones? Great. I ask for permission. We get out the underwriting sheet and we start going through that. But I wanted to cover tonight, presentation as much as we possibly could. So we're going to do another segment. And by the way, this is being recorded right now. And so I'm going to be able to send this back out so you can watch it and listen to it. And then what I'm going to do, hopefully in the next couple of days, is do a really clean version of this with no overcoming objections, no whatever, and then just send that out. It's something you can listen to. And I'll play both sides of the client, but we'll just go straight through it and be able to do that. So hopefully I'm going to unmute this real quick because I want to talk to you guys. I'll wait, unlock the meeting. Unmute everybody. Okay. Can you guys hear me okay? Okay, hold on real quick. Let me put in my other earpiece. I think that one just went dead. Give me a sec. Okay, how about questions, you guys? Questions about some of the stuff we covered just now? Anything pop up? Anybody want to ask anything? Hopefully, are you overwhelmed? Hopefully you're not overwhelmed. I mean, I give a lot because, Jackie may pull something from this, Matt may pull, but this is not going to be the first time or the last time you've heard about this. Anybody have any questions? Does everybody understand the mortgage calculator? Everybody understand? All you're doing is let me tell you another reason why this is so important. The mortgage calculator, what it does is it gives them a visual as opposed to you just giving them information, right? You're muted still? Darn. Oh, that's weird. Says everybody's unmuted. Chandler, can you hear me? That's weird. Lock meeting, mute everyone else. Okay, good. Okay, cool. So the mortgage calculator allows them to visually see, because it's one thing to tell them something, it's a whole other thing to have them see it. So when you throw in their mortgage at $150,000, and you can show them at 10 years it's going to be at 118, and at 15 years it's going to be 75,000, right? And just a rule of thumb, just the old loan officer in me, okay, 30-year mortgages is what almost everybody does. And at 15 years, they owe exactly half. So even if you, in your mind, if it's $100,000, at 15 years, it's 50. Well, what do you think it is at 75? Okay, in 10 years, it's about 70,000. So you can just visualize that in your head. Okay, so it was literally 118 from 150. It was 118 in 10 years. At 15 years, it was 75,000. So you can use half their mortgage, and it always covers. It always is enough. Some people know when you show a price, I usually show a price of 3/4 or half, or all of it 3/4 and half. but I used half as my explanation. So we already know that works. They've bought into it. It makes total sense, and it makes financial sense. So when you're giving them the prices, and I'm making the prices up, by the way, but let's say it was, $110 a month, and 75% of their mortgage was $80 a month, and that's exactly right. That's exactly right. See the value of covering the whole house. So I did what some of them wanted me to, and here's what's going to happen. So it's 110, 80, and let's say it's $65. And so the way that I present that to them, say, Mr. and Mrs. Jones, here's what I've done. I went ahead and I priced out the entire mortgage, because you may end up wanting to do that. 75% of the mortgage at $80,000. At $75,000, and then I did $50,000. I'm sorry, that's not true. $150,000, $120,000, and $75,000. Okay, and so that's going to be either $110 a month for the whole mortgage, it's going to be $84.16, or $65.42. Now here's the thing: it doesn't matter to me which one you pick, because they all protect the mortgage, the equity of your home, all of the payments that are going to be because are going to need to be made, your wife's sanity, her credit, everything that goes along, protect the family, the kids, to allow her and put her in a position of strength. No matter what she chooses, she's going to be okay. But to me, it doesn't matter to me which one you pick. So, Mr. and Mrs. Jones, let me ask you, which one do you think fits the budget best? Because that's really the only decision you're making. Oh, well, I think, and they generally pick the 50% or the 75%. Very rarely will they pick the whole thing. But if they do, they saw it all. It's their decision. It's always their decision. And then when they go, well, no, I think the one for $80 a month is fine. I think $70. Honey, what do you think? No, yeah, I think that's fine. Okay. Do you guys want to know what I think? Well, yeah, I think you made a good decision. See, I want to concur with them. It was their decision. They bought into it. They picked it. And then I always say, well, would you guys want to know what I think? Well, yeah, we would. I think you made a good decision. Oh, yeah, no, because right here that covers 75% of it. And sometimes, if I feel it's necessary, I'll go show them what that looks like in the mortgage calculator. And then it's locked in just like that. That's great financial sense, Mr. and Mrs. Jones. Yep. Okay. And this fits the budget, right? Oh, yeah, totally. Okay. Well, perfect. So, Mr. Jones, if you could go grab your driver's license, and I'll go ahead and get the iPad out. We're going to get that request for coverage going. I never asked him if he wanted to take an application. Because if you do that, what does the mouse do? They sometimes want to find the light. And here's what will happen if you start asking, well, no, so this fits the budget? Oh, yeah. And this is the coverage? Yeah, that's perfect. Okay, great. So do you guys want to see if you can get approved and take an application? Well, do we have to decide tonight? See, you just walked right into that one. You walked right into it. Well, do we have to? Well, I mean, you're giving them an out. Don't do that. It's an assumption. If it fits, if they understand it and it makes sense and it fits the budget, why would they not want to do that? So that's when I'll say, well, great. We'll tell you what, Mr. Jones, if you would go ahead and grab your driver's license, I'll get out the request for coverage on the iPad, and we'll see if we can get you approved, okay? Okay, great. Done. 99%, that's what you're doing, okay? So, Chandler, if you're doing it, now, okay, so the only thing I didn't do, Chandler, since you talked about it, I would show, well, here's what I've done. We got GPM, what we talked about that a lot of people go with, Foresters, and Mutual of Omaha. So let's talk, and then they can see that the prices are different, the GPM. And then I'll say, well, it looks like GPM is going to be at least out of pocket. Now, they all have living benefits. They all have the critical, the chronic, and the terminal illness. You've got the death benefit. So they're all the same. The policies are exactly the same in the companies. You just have to figure out which one you think fits the budget best. And it looks like GPM does that, right? I mean, is that what your guys are seeing too? Okay, yeah. Well, it looks like, okay. So, the only thing you want to determine now is whether you want, the whole amount, 75% or 50%. Now, I told you that it doesn't matter to me whether you pick all of it, 75% or all of it, because why? Because it protects your wife, the mortgage, the equity of the home, your family, your children, her sanity, her credit, everything. And so the only decision you need to make, Mr. Jones, is which one do you think fits the budget best? And then they'll say, well, I think the 75%, blah, blah. How do you think? Okay, so that's how this goes. Now, it might seem a little overwhelming with what we just did, but I want to let you know, let's go back to the beginning. Knock on the door, get to the kitchen table, make a connection, and then we're going to transition into the slides. And then all you have to do is read it. This is how Jason Patello, Matt Wilson, Michael Wright, it's how everybody just, and by the way, it doesn't have to be this particular one. The one Bill Martin put together, excellent. Hundreds and hundreds of people use that. I just use this one. This one I like to teach on and explain on, because even if you use the one on the website, some of the things we've talked about tonight, the process is still the same. You still got to get in the house, make a connection, talk about mortgage protection, get their underwriting down, the height and the weight and the medications. You still have to do all that stuff, and you still have to show a price. I'm just talking about the guts of building value. That's what I wanted to talk about tonight. And it doesn't matter to me whether I was on a virtual appointment or whether I was in their house. Nothing changes for me. I've still got to make a connection. I still have to build that. Nothing changes. The way you communicate, meaning over Zoom, that changed. But I still have to build a value and make a connection. So hopefully this has been informative. It's going on 6:30, so we're going to go ahead and kind of end this up now. Let me see. I got a text message here. Exactly. There are a lot of top agents for sure. You're right, sir. You're right for sure. Use these things, and everybody has to do those things. So, guys, I appreciate your time. Thanks for being on. I know it was 90 minutes. I know somebody jumped in, and some have jumped off, and that's great. I'll send it back out. So, appreciate it very much, you guys. Take care. Have a great Wednesday night. Let's get out there and get after it. If you have any questions, feel free to shoot me a text message, you guys. All right, take care. All right, bye-bye now.